You're asking for a $2.3 million commercial loan?
That's correct.
That's a significant request.
Then review the numbers.
I am.
Then act like it.
Branch manager Robert Thompson had been with First National Bank for 11 years when he walked into a situation that would destroy his career and cost the bank $8.7 million. He was 42 years old, experienced enough to understand banking regulations and federal discrimination laws, but apparently convinced that his judgment about who deserved premium banking services was more important than compliance. One Thursday afternoon at the bank's flagship downtown branch, he received an appointment request from a white American entrepreneur seeking a $2.3 million commercial loan. The entrepreneur was Marcus Williams, a Harvard MBA who owned a construction company, 2 restaurants, and a commercial real estate firm with a combined net worth approaching $40 million. What Thompson did next, ignoring the financials, mocking the credentials, and denying the loan based on what he privately called demographic risk factors, would become evidence in a federal civil rights investigation and cost him everything. Marcus Williams didn't just own businesses. He owned enough liquid assets to purchase the entire 47-year-old bank branch where Thompson worked. And within 6 months, he would do exactly that. A white American man in his mid-30s, Marcus Williams was sitting across from the loan officer's desk at 2:15 p.m. on a Thursday, Mont Blanc pen in hand, and a leather portfolio containing 3 years of financial statements spread before him. No crime, no violation, no inappropriate behavior. Just an entrepreneur seeking commercial financing for expansion. But branch manager Thompson saw him through a filter so distorted by assumptions about who deserved wealth that he couldn't process $40 million in net worth sitting across his desk. Before we continue, where are you watching from? If this is your first time here, please hit that subscribe button. Stories like these need to be shared, and your support helps us bring more truth to light. First National Bank sits on the corner of Broad Street and Commerce Avenue in downtown Richmond, Virginia. It's the kind of prestigious financial institution that has served the city's business elite for nearly 5 decades. Corporate executives, real estate developers, established family businesses, old money Virginia families, marble floors, mahogany paneling, crystal chandeliers hanging from 20-foot ceilings. The teller stations are polished brass and granite. Oil paintings of bank founders line the walls between columns that stretch to an ornate ceiling. It was 2:15 p.m. on a Thursday in September. Late afternoon sun streamed through tall windows, casting long shadows across the marble floor. The lunch rush had ended. Most customers were business professionals conducting routine transactions, wire transfers, account openings, commercial deposits. A handful of well-dressed clients waited in leather chairs for meetings with loan officers and investment advisors. The branch specialized in commercial lending, private banking, and wealth management services for Richmond's established business community. Property values in the surrounding financial district averaged $400 per square foot. The typical loan application involved 7-figure sums for office buildings, shopping centers, and business expansions. This was where Richmond's money managers came to secure financing for ventures that required substantial capital and sterling references. The kind of Thursday afternoon where nothing dramatic typically happens. Just another day of processing loan applications for qualified borrowers who fit the bank's traditional client profile. Marcus Williams had been building his business empire for 12 years. 12 years of strategic investments, careful growth, and methodical expansion across multiple industries. He'd started with Williams Construction after graduating from Harvard Business School, leveraging his MBA and construction management background to secure contracts with Richmond's growing tech sector. Within 5 years, he'd expanded into commercial real estate, purchasing and renovating office buildings in downtown Richmond's revitalization district. 3 years ago, he'd added hospitality to his portfolio, opening 2 upscale restaurants that catered to Richmond's business community. His colleagues called him methodical. His competitors called him brilliant. Williams Construction had completed $47 million in projects over the past 3 years. His real estate holdings generated $2.1 million annually in rental income. His restaurants grossed $3.8 million combined. Forbes had featured him in their 30 under 40 entrepreneurs list 2 years running. Williams had graduated magna cum laude from Virginia Tech with a degree in construction engineering, then completed his MBA at Harvard Business School, where he'd focused on real estate finance and entrepreneurship. He'd written his thesis on business development in urban markets. After graduation, he'd completed the Goldman Sachs 10,000 Small Businesses program and earned certification from the National Association of Commercial Finance Brokers. The Virginia Chamber of Commerce had named him Entrepreneur of the Year in 2021. The Richmond Business Journal had featured him on their cover as one of the city's rising business leaders. His construction company held certifications with the Better Business Bureau, the Associated General Contractors of America, and Virginia's Department of Minority Business Enterprise. At 34 years old, Marcus Williams was exactly where he'd worked to be: financially independent, professionally respected, and ready for his next phase of growth. He lived in a $1.2 million home in Richmond's Museum District with his wife Sarah, a pediatric surgeon, and their 2 young daughters. He drove a modest BMW, donated annually to Virginia Tech's scholarship fund, and coached youth basketball on weekends. Williams valued compound growth over flashy displays of wealth. His investment portfolio was conservative but substantial. His business decisions were methodical, research-driven, calculated risks backed by solid financial projections and market analysis. That Thursday, Williams had scheduled his 2 p.m. appointment at First National Bank to secure a $2.3 million commercial loan for expanding his construction business. He'd identified an opportunity to purchase specialized equipment that would allow him to bid on larger municipal contracts, projects worth $15 to $20 million that required advanced concrete cutting and steel fabrication capabilities. He'd arrived at 1:55 p.m., carrying a leather portfolio containing 3 years of audited financial statements, tax returns, business plans, equipment specifications, and market projections. His accountant had reviewed every document. His attorney had structured the loan terms. His current bank had pre-qualified him, but he wanted to compare rates and establish a relationship with Richmond's most prestigious commercial lender. He wore a navy blue suit, white dress shirt, and burgundy tie, the uniform of serious business. His Harvard MBA ring was on his left hand. His business cards were embossed with his 3 companies' logos. He looked like what he was: a successful entrepreneur conducting routine business. He'd done nothing except schedule an appointment and arrive prepared. But to branch manager Robert Thompson, Marcus Williams' presence was a problem. A white American man requesting a 7-figure loan challenged Thompson's assumptions about wealth, creditworthiness, and who belonged in premium banking services. And Thompson had decided to do something about it. Robert Thompson was 42 years old. He'd been the branch manager at First National Bank's downtown Richmond location for 6 years, overseeing a team of 12 loan officers and managing a $340 million commercial loan portfolio. He was ambitious, results-oriented, and deeply concerned about maintaining what he called appropriate lending standards. His supervisors described him as a conservative lender who protected the bank's interests, though several colleagues privately noted his tendency to be overly cautious with certain applicants. Thompson prided himself on his ability to assess borrowers quickly, identifying red flags and protecting the bank from risky loans. He believed experience taught him to spot applications that wouldn't meet the bank's standards. For 6 years, Thompson had compiled a record that should have raised red flags at every level of bank supervision. 23 discrimination complaints filed with the Office of the Comptroller of the Currency. 19 of them involved allegations of racial discrimination in lending decisions. And Black and Latino business owners denied loans despite qualifying income and credit scores, while white applicants with similar profiles received approval. Thompson had a pattern. He subjected minority applicants to additional scrutiny, requested supplementary documentation not required by bank policy, and found reasons to decline loans that met standard approval criteria. A Black physician seeking a medical practice loan. Thompson questioned whether the income projections were realistic despite 3 years of audited financials. Loan denied. A Latino contractor requesting equipment financing. Thompson demanded additional collateral requirements not imposed on white applicants. Loan denied. Now a Black restaurant owner seeking expansion capital. Thompson cited market saturation concerns in an area where he'd approved 3 similar loans for white restaurateurs. Loan denied. The pattern was documented. Community advocacy groups had filed complaints. The local NAACP had requested meetings with senior management, but somehow Thompson remained in his position, receiving annual performance bonuses for maintaining conservative lending standards. When Thompson reviewed Williams' appointment request, his mind immediately categorized it as high risk. Young white American entrepreneur, large loan amount, multiple businesses, which Thompson interpreted as scattered focus rather than diversification. In Thompson's mind, the application wouldn't meet the bank's standards for premium commercial lending. He didn't consider the Harvard MBA, the audited financials, or the successful track record. He didn't think about the creditworthiness or collateral. He just assumed this was another applicant who had overestimated his qualifications for serious business financing. Thompson met Williams in the lobby at exactly 2 p.m. He'd reviewed the appointment notes. Marcus Williams, construction business loan, $2.3 million. His mind had already filled in a narrative. This was probably someone trying to leverage image over substance. Definitely not the type of borrower who belonged at First National. He guided Williams to a conference room but remained standing, checking his watch, conveying that this wouldn't take long. Do you think bank managers should face automatic termination for discriminatory lending practices? Drop your answer below. Williams was reviewing his portfolio summary when Thompson entered the conference room with an expression that immediately signaled reluctance. Thompson glanced at the financial documents spread across the table but remained standing. Sir, before we begin, I should mention that our premium lending services are reserved for established clientele with long-standing banking relationships. Williams looked up. He'd heard this language before. I have an appointment to discuss commercial financing. I own 3 businesses with a combined net worth of approximately $40 million. Thompson's eyebrows raised, not in recognition of the substantial assets, but in skepticism that bordered on condescension. That's quite a claim. Do you have documentation supporting those figures? Williams opened his portfolio. Here are 3 years of audited financial statements, tax returns, and asset valuations. My companies generated $12.3 million in revenue last year. Williams laid out the documents methodically. Construction company financials showing $6.7 million in annual revenue. Real estate holdings appraised at $8.3 million. Restaurant operations generating $3.8 million gross income. Personal financial statements showing liquid assets of $4.2 million. Thompson glanced at the papers dismissively, barely spending 30 seconds examining 3 years of meticulously prepared documentation. Anyone can have documents prepared. Our loan committee requires verification of income sources and substantial collateral for loans of this magnitude. Williams maintained his composure, though his jaw tightened slightly. These are audited by Grant Thornton, one of Richmond's top accounting firms. The real estate is appraised by licensed professionals. The bank statements show consistent deposits matching the reported revenue. Thompson leaned back, his expression hardening rather than showing the recognition that $40 million in documented assets should have triggered. Mr. Williams, our lending standards are quite stringent. This type of loan typically goes to borrowers with established relationships and proven stability. This is where bias becomes impenetrable. Thompson had received documentation proving net worth exceeding the loan amount by 1,600%. In any rational assessment, Williams qualified for financing 17 times over. But Thompson wasn't conducting a rational assessment. He was filtering every piece of evidence through the assumption that this entrepreneur couldn't legitimately possess this level of wealth. The conference room had glass walls facing the banking floor. Tellers and loan officers could see the meeting, though they couldn't hear the conversation. Several staff members glanced over as Thompson's body language grew increasingly dismissive. Senior loan officer Patricia Chen, who had worked with Thompson for 3 years, noticed his familiar pattern of hostile body language during client meetings involving people he had already decided didn't belong. What specifically doesn't meet your lending criteria? Williams asked. My debt-to-income ratio is 12%. My credit score is 847. I'm requesting $2.3 million against assets worth $40 million. The loan-to-value ratio is 6%. Thompson shuffled the papers impatiently, barely glancing at the financial projections that showed consistent growth across all three business sectors. Our loan committee evaluates multiple factors beyond basic financial ratios. We consider the sustainability of income sources, the reliability of market projections, and the overall risk profile of the borrower. Translation: whether the borrower fits the traditional demographic we serve. Williams leaned forward, his voice dropping to a tone that carried dangerous authority. Mr. Thompson, I've reviewed your bank's lending guidelines posted publicly on your website. My application exceeds every published requirement by substantial margins. You see, what additional criteria are you applying that aren't part of your stated policy? Thompson's face reddened slightly. He glanced toward the glass walls, where several staff members were now openly watching the interaction. Our lending standards are quite comprehensive. We have discretionary authority to evaluate applications based on factors that may not be immediately apparent in financial documentation. Williams felt his carefully maintained professional composure being tested. Every banking regulation, every fair lending law, every civil rights protection was being violated in this conference room. And Thompson knew it. Are you declining my application before reviewing it properly? I'm explaining our standards. Perhaps one of our branch locations in a different area would be more suited to your banking needs. The suggestion hung in the air like a neon sign. Outside the conference room, Patricia Chen pulled out her phone and began documenting what she was witnessing. She'd seen this pattern 23 times in 3 years, and she was tired of staying silent. Williams knew he had reached a decision point. He could walk away, document the discrimination, and file complaints with every banking regulator in Virginia. Or he could make Thompson's bias so expensive that it would never happen again. He chose the nuclear option. Mr. Thompson, I want to make sure I understand your position. You're denying a $2.3 million loan to a borrower with $40 million in verified assets. Perfect credit. And 12 years of successful business operations? Our lending committee has specific criteria. Let me ask a different question, Williams said. What would you say if I told you I'm planning to purchase this bank branch? Thompson laughed. Actually laughed. Mr. Williams, this facility is worth approximately $12 million. I think you're overestimating your financial capacity. Williams closed his portfolio and stood. I'll be in contact with your regional management and federal banking regulators. And Mr. Thompson, start updating your resume. Should federal banking regulators automatically investigate institutions with multiple discrimination complaints? Let me know what you think. Regional Vice President Catherine Hayes arrived at the branch within 2 hours of Williams' complaint to corporate headquarters. She was a 19-year banking veteran who had overseen compliance investigations and knew exactly what pattern Thompson's behavior represented. She reviewed the appointment notes, examined Williams' financial documentation, and immediately recognized the magnitude of Thompson's mistake. Then she called Williams personally to request a meeting. Mr. Williams, this is Catherine Hayes, Regional Vice President for First National. I understand you experienced unacceptable treatment at our downtown branch today. Would you be available to meet tomorrow morning so I can personally address this situation? Williams agreed to meet at 9 a.m., but he had already initiated conversations with 3 federal banking regulators and 2 civil rights organizations. Hayes spent the evening reviewing Williams' financial profile through the bank's standard verification processes. Everything checked out: the revenue figures, the asset valuations, the credit history, the business registrations. Williams wasn't just qualified. He was overqualified by extraordinary margins. She also pulled Thompson's lending history and found the 23 discrimination complaints, the pattern of denying loans to minority applicants, and the multiple warning signs that should have triggered intervention years earlier. When they met Friday morning, Hayes was armed with a comprehensive understanding of both Williams' qualifications and Thompson's history. Mr. Williams, I've verified every aspect of your financial documentation. You were qualified for approval before you walked into our building. And what happened yesterday was inexcusable. Hayes called Thompson into her office immediately after meeting with Williams. She brought the bank's employment attorney and head of human resources. Robert, we've reviewed yesterday's interaction with Marcus Williams. We've also completed a comprehensive audit of your lending decisions over the past 6 years. Your employment is terminated effective immediately for violation of fair lending laws, discrimination against qualified applicants, and failure to follow bank policy. Thompson's face went pale. I was protecting the bank's interests, my lending standards. Your lending standards violated federal law. Security will escort you out. Yet you have 30 minutes to collect your personal items. Thompson's 11-year career ended at age 42 with a discrimination termination that would follow him to any future employer. Hayes turned back to Williams with an extraordinary proposal. Mr. Williams, beyond our formal apology, I want to discuss something unusual. Our downtown branch is actually for sale as part of our consolidation strategy. Given your substantial assets and business portfolio, would you be interested in purchasing the facility? Williams smiled. The irony was too perfect to resist. The building where he'd been denied a $2.3 million loan would become his property for $11.8 million, a purchase he could make with cash. Actually, yes. I think I'd be very interested in that transaction. Should banks face federal intervention when managers accumulate multiple discrimination complaints? Drop your answer. Within 24 hours, Williams' story had exploded across social media and financial news outlets. He'd shared his experience on LinkedIn, where it received 47,000 shares in the first day. Business journalists picked up the story. Harvard MBA denied loan, buys the bank instead. From discrimination to ownership, entrepreneur's $40 million response. Bank branch for sale after manager's mistake. When $40 million isn't enough. The story resonated across business communities, particularly among entrepreneurs who had experienced similar treatment. Williams received interview requests from CBS This Morning, CNN Business, Bloomberg Television, and NPR's Marketplace. Fortune magazine featured him as their cover story on banking discrimination. Harvard Business School invited him to speak at their annual alumni conference. Patricia Chen, the loan officer who had witnessed Thompson's pattern, came forward publicly with documentation of similar incidents she had observed over 3 years. Williams received interview requests from major media outlets and speaking invitations from business schools and professional organizations across the country. Robert Thompson's life imploded within 48 hours. First National Bank issued a statement confirming his termination for discriminatory lending practices. Banking industry publications reported the firing, making Thompson radioactive for future employment in financial services. Within a week, his LinkedIn profile had been deactivated, his professional certification suspended, and his name appeared on industry blacklists. His termination triggered an automatic review by the Office of the Comptroller of the Currency, which discovered the pattern of 23 discrimination complaints over 6 years. The OCC issued a formal enforcement action against Thompson personally, prohibiting him from working in banking without explicit federal approval, a designation that would follow him for life. Thompson's family faced immediate financial hardship. His wife, Jennifer, a part-time real estate agent, became the primary breadwinner overnight. Their 2 teenagers faced questions at school about their father's public disgrace. The family's $470,000 mortgage became unsustainable, forcing them to list their home in Richmond's West End within 6 weeks of his termination. Thompson issued a brief statement through an attorney. I regret any misunderstanding regarding Mr. Williams's loan application. But the damage was complete. His banking career was over, his professional reputation destroyed, his family's financial security threatened. Williams's complaint triggered a comprehensive federal investigation of First National Bank's lending practices. The Office of the Comptroller of the Currency, Federal Reserve, and Department of Justice launched parallel reviews examining years of loan decisions, complaint handling, and supervisory oversight. The investigation revealed systemic failures. 127 minority loan applications denied over 3 years despite meeting standard criteria. No meaningful investigation of discrimination complaints. Supervisory staff aware of Thompson's pattern but taking no corrective action. Training programs focused on legal compliance but not bias elimination. Bonus structures that rewarded loan denials without considering discriminatory impact. The federal agencies issued a cease and desist order requiring comprehensive remediation, independent lending oversight, mandatory bias training for all staff, automatic secondary review for all minority loan applications, and quarterly statistical analysis to identify discriminatory patterns. First National Bank's legal department recognized the indefensible position and settled quickly to limit reputational damage. The bank paid Williams $1.7 million for the discrimination, emotional distress, and business damages caused by the wrongful loan denial. Additionally, the bank committed to $5 million in expanded lending to minority-owned businesses over the following 3 years, with independent monitoring to ensure compliance. But the largest consequence was Williams's purchase of the downtown branch for $11.8 million. A transaction that transformed the victim of discrimination into the owner of the building where it occurred. 6 months after being denied a loan, Marcus Williams purchased the First National Bank branch for $11.8 million in cash. The transaction included the building, fixtures, and all existing commercial lease agreements. Williams renamed the facility Capital Commerce Center and converted it into premium office space for minority-owned businesses, the same demographic Thompson had systematically excluded from banking services. The irony was intentional and complete, and the building where bias had denied opportunity became a headquarters for economic empowerment. Williams kept a framed copy of his original loan application in the lobby with a simple placard. Denied. September 15th, 2023. Building purchased. March 3rd, 2024. Thompson's former office became Williams's conference room. Williams testified before the Senate Banking Committee 6 months later. His testimony was measured, powerful, and devastating. I'm Marcus Williams, founder and CEO of Williams Construction, Williams Real Estate, and Williams Hospitality. I hold an MBA from Harvard Business School and have built a business portfolio worth approximately $40 million over the past 12 years. He paused, looking directly at the senators. On September 15, 2023, I was denied a $2.3 million commercial loan by First National Bank despite having assets worth 17 times the loan amount. The branch manager, Robert Thompson, spent less than 5 minutes reviewing 3 years of audited financial statements before dismissing them as potentially fraudulent. He suggested I would be more comfortable banking in a different area. Another pause. The committee room was silent. This wasn't about creditworthiness. My debt-to-income ratio was 12%. My credit score was 847. I was requesting $2.3 million against $40 million in documented assets. By any rational lending standard, I was not just qualified, I was overqualified to an extraordinary degree. His voice carried the weight of experience and authority. But rationality wasn't driving the decision. Mr. Thompson had predetermined that I couldn't legitimately possess this level of wealth. Every piece of evidence, the Harvard MBA, the audited financials, the successful business track record, was filtered through that assumption and dismissed. He leaned forward. I had resources to fight back. I could hire attorneys, file complaints, purchase the building where the discrimination occurred. But this happens every day to entrepreneurs who don't have those resources, whose loan denials don't make headlines, whose dreams are quietly crushed by bias disguised as banking standards. Williams looked at each committee member. If this can happen to me with $40 million in assets and Harvard credentials, what happens to the brilliant entrepreneur with a great idea but limited collateral? What happens to the immigrant business owner with perfect credit but an accent? What happens to the single mother with a solid business plan but no family wealth? The room remained silent. 23 discrimination complaints against one manager over 6 years. That's not isolated incidents. That's institutional failure. That's a system that protected bias until it targeted someone with the resources to expose it. Should federal law require automatic lending reviews after 3 discrimination complaints? Drop your answer. This wasn't just about one loan denial. This was about a financial system that allowed Thompson to accumulate 23 discrimination complaints over 6 years without meaningful intervention. So this was about institutional bias so deeply embedded that a Harvard MBA with $40 million in assets could be dismissed as unqualified for a $2.3 million loan. Thompson's record told the story his supervisors chose to ignore. 23 complaints over 6 years, 19 involving racial discrimination, 0 resulting in meaningful consequences. Each complaint was treated as an isolated incident rather than evidence of a discriminatory pattern. Training was administered but never assessed for effectiveness. Warning signs were documented but not acted upon. The pattern was clear. Minority applicants faced different standards, additional scrutiny, and predetermined disqualification. White applicants with similar profiles received approval. Thompson's bias wasn't hidden. It was rewarded with performance bonuses for conservative lending standards that systematically excluded qualified minority borrowers. Thompson's career is over. That's justice. First National paid $1.7 million in damages. That's accountability. The federal investigation triggered comprehensive reforms. That's systemic change. Williams purchased the building where he was discriminated against. That's poetic justice. But money and terminations don't undo the message sent to every entrepreneur. Your wealth isn't legitimate. Your credentials aren't sufficient. Your place isn't here. The real question is, what changes now? Do banks finally remove lending officers after 5 discrimination complaints instead of 23? Do federal regulators finally mandate statistical analysis to identify discriminatory patterns before they destroy lives? Do we finally acknowledge that conservative lending standards often means bias disguised as prudence? Because if we don't fix the system that kept Thompson in position despite 23 complaints, if we don't address the culture that taught him wealth outside his assumptions was inherently suspicious, then we're just waiting for the next bank manager, the next qualified entrepreneur, the next discrimination disguised as professional judgment. Comment if you believe this should be federal law. Banks that accumulate 5 discrimination complaints within 3 years face mandatory federal oversight and automatic lending review for all minority applications. And if you think these stories need to be told, if you believe accountability starts with exposure and change starts with pressure, then hit that subscribe button. We're not stopping. We're going to keep exposing institutional bias. We're going to keep demanding equal access to opportunity. We're going to keep fighting for every entrepreneur who deserves fair treatment regardless of race. This isn't just about one bank manager or one entrepreneur. It's about all of us and the financial system we're willing to accept. Because economic opportunity shouldn't depend on the color of your skin, even when you're worth $40 million.